So what this indicator is showing us is that in the next few candles, price might rise all the way up to this level before pulling back down. If we had taken a long trade right here, you'd see that the forecast was actually spot on. Then a little later, the same indicator suggests that the price could drop down to this level over the next few candles. And again, if we'd enter a short trade there, that prediction would have paid off pretty nicely. This future predicting indicator is known as the MACD-based price forecasting tool, created by Algo, my favorite author. Big shout out to them, by the way. In this video, I'll walk you through what this tool is, how you can trade with it, and how we're going to pair it with two other indicators to build a simple but effective trading setup. And fear not, and I'm well aware of the fact that majority of you, my dear viewers, my friends, you are on the free plan of TradingView, but don't worry. Just before the end of the video, somewhere during it, I will show you a way, actually two TradingView hacks to use more than just two indicators on the free plan. Believe me, you're gonna love it. Oh, and if you get something useful out of this video, make sure to leave a like. Let's dive in. Alright, to add this indicator to your chart, head over to TradingView. If you don't have an account yet, there's a link down in the description. Switch to the 5-minute chart for CAD CHF. Open up the indicator search bar and type in MACD-based price forecasting. It will be this one from Algo. This tool is a smart forecasting system that anticipates where price might go next using the popular MACD indicator. It built its forecast by studying how price usually reacts after a specific MACD patterns form. By spotting repeatable MACD signal behavior in past data, the tool projects the most likely direction prices will take. The indicator itself is super straightforward and includes just a few main parts. First, you'll see this line. It marks the zero level from the standard MACD. Then you've got these red and green areas, which reflect the MACD histogram. It's basically a copy of the regular MACD. Watch. If you compare this tool to the default MACD indicator, you'll notice that when this area turns green, the MACD does too. When it turns red, the MACD histogram also goes red. It's a one-to-one mirror of MACD activity. That mirroring continues until the MACD histogram flips color. When that happens, the MACD-based price forecasting tool kicks in with its price prediction. You'll see a forecasting zone that outlines where price could head next. It comes with a top boundary for the highest expected price and a bottom line for the lowest target. The center of that zone is the average projection. This line highlights the price area with the highest probability of getting hit. Now, here's how the indicator actually functions. And to make this clear, we're going to look at the MACD down here. When I play the chart, you'll see that the forecast area appears in orange. And while the histogram bars stay red, this forecast zone holds steady. But as soon as the histogram flips green, like it does right here, the forecast area switches to the new blue zone, meaning price is likely to move higher. That blue zone stays in place until the MACD histogram goes red again. And then we get another forecast, this time bearish, and so on and so on. To trade with this indicator effectively, we'll add two more indicators to our setup. But before we do that, I want to introduce you to my trading family at Bybit.
Welcome aboard our crypto arc where dreams meet freedom. Join us on this journey as we empower crypto believers with knowledge and tools to achieve their goals. And guess what? We're just getting started in this world of endless possibilities. Click the link below to join us now. Enjoy zero fees on spot trading for the first 30 days and a chance to win up to 30,000 USDT in deposit rewards. Join Bybit today and ride the wave of crypto success.
Alright, back to the strategy. The first indicator we need to add is Twin Range Filter by this amazing author. After that, we'll add the higher high, lower low strategy, which is this one by Lonesome the Blue. Big shout out to all of them. Double click the higher high, lower low strategy and go into the inputs tab. Change the left bars to 3 and right bars to 4. Next, set the line style for support and resistance to solid and drop the thickness down to 1 pixel. I'm also going to flip the colors, turn the green into red and the red into green. Then, under Style, disable Higher Low, Lower High, and Bar Color. Once that's done, hit OK. As for the twin range filter, we'll just keep the default settings. No changes needed. So how do we actually trade using these three indicators? Let me break it down. First, look for a moment when the price breaks and closes above the most recent higher high level. So here's our previous higher high, and this candle breaks and closes above it. That confirms a bullish trend is forming. Second condition, at the time of that breakout, the looks out of the MACD-based price forecasting indicator should be showing a bullish forecast. In other words, you want to see a blue plot pointing upward. This boosts our odds of hitting our take profit. Third, we need a buy signal to print just after that most recent higher high. So here's our higher high, and we need to see at least one long signal showing up from this point on. And yes, there's one right here. If there weren't any long signals printed after this breakout, the entry would be invalid. Lastly, set your long position here. To place your stop loss, grab the data and price range tool. Draw from the most recent swing low to the close of the entry candle. Your stop loss should be set at the midpoint of the rectangle, right on the center line. We do this because swing lows are often too far from a reasonable stop. Then set your take profit at 1.5 times the risk. And here's a key tip. After setting your entry and targets, drag this tool to the right and make sure the blue line from the forecast goes past your take profit. Just like here, this bumps up the chances of price reaching your target. Let the trade play out, and yep, it ends up being profitable. Now for short trades, we flip the rules. Find where price breaks and closes below the most recent lower low, like it did here. And during that breakout, the MACD-based price forecasting tool should be showing a bearish prediction. Second, you need to see at least one short signal from the twin range filter after that lower low has formed. Start from the breakout candle and look forward. And right here, we get a short signal. That matters because it signals bearish momentum, which confirms our setup. For the final setup, set your short position here. Again, grab the dates and price range tool. Draw from the most recent swing high to the close of the entry candle, and place your stop loss at the midpoint. Set your take profit at 1.5 times the risk. Drag the tool to the right and check if the orange line from the forecast dips past your take profit level. Like in this case, it does, boosting our odds of hitting that take profit. Let the trade play out, and once again, it ends up being a solid win. To sum it up, this strategy brings together the MACD-based price forecasting, the twin range filter, and the higher high lower low strategy. It uses trend following and momentum signals to lock in clean entries and exits, whether you're going long or short, helping you trade with more confidence and better accuracy. And as promised earlier, make sure to check out the top videos on the left and right to find out how to use more than just two indicators on the free plan of TradingView. And on the bottom left and right, you can watch the tutorials which I've showed you before, how to turn any trading strategy, including this one, into a bot with alerts so it does the job for you while you're not around. Just remember, before you trade any strategy live, always do your backtesting and forward testing to see how well it performs over time. That wraps it up for this video. Hope you got some value out of it. If you did, don't forget to hit that like button and consider subscribing for more. Thanks for watching. Catch you in the next one.